ladies and gentlemen, welcome to the Modern Investing on IBM TV. My name is Sasha Star. I would like to introduce our distinguished guests, starting with the founder of IBM TV, Nick Paliveda. Hello, Nick.
Hello, Sasha. Yes.
Then we have also our renowned multi-million and a few $billion or probably $1 trillion by now investor and a great fund manager, Shaquille O'Neal. Great to see you.
I didn't. He has his own fan club down under.
I didn't leverage myself. I should have leveraged myself 20 times into Tesla stock, and then I would have a multi-billion-dollar fund. But unfortunately, I got that one wrong.
Should have been all in Tesla about a year ago.
And now I would like to introduce for the first time Roderick Mann. Thank you very much for joining us for the show. Glad to see you. And maybe we'll have a few more guests. As soon as they will show up, we'll introduce.
Just don't bring anyone from Connecticut, please.
Yeah, what about our friend in Connecticut, Peter Bennett?
Don't bring anyone from Connecticut. Yeah, all the hedge funds are up in Connecticut. They vote for the Democrats.
That's right. Long-term capital management in Connecticut, and so is Peter Bennett.
Hello, Peter. Thank you for joining us as well. Excellent. So it's a tug of war now in the stock market. So the last couple of days, there was a little bit downturn in the market. It's in my opinion, it's a great anomaly which will fix itself in next hour and a half, because with so much money coming into the market, because there is no alternatives, there is nowhere to put your money except, well, maybe Bitcoin. Okay, so there is alternative to a market. Okay, so people who have all this stimulus checks and all the other stuff, they may say, who needs a stock market? And I have a Bitcoin, which will go, according to some analysts, it has to go soon to $400,000 per Bitcoin. So I don't think even Tesla can compete with such appreciation. So,
well, Sasha, you could be wrong about that, and I'll defer to our friend in Connecticut for this, because Tesla has government behind it, right? And when government gets behind things, all sorts of wild, wonderful things can happen. Bitcoin, on the other hand, is kind of anti-government, so who knows? Tesla could be. It could be the first, $10 trillion company with no revenue.
Tesla? What did you say? $10 billion company. $10 trillion? No revenue. I don't have a good, my ears are a little bit deceptive today. So you're saying $10 trillion. Maybe
with no revenue. Well, it's just worth 10.
Well, let's. I mean, look, nothing is logical these days. Peter, please explain what's going on in Greenwich, Connecticut. All these hedge fund managers who are making way more than me, because as a fund manager, I obviously suck. These guys are making billions and billions of dollars a year, and they're voting for the Democrats, and they want to pay more in tax because that's good for the economy. I'm not sure. Peter, you live there. Please explain.
Bunch of points just came up. One with Bitcoin. Actually, I agree with you that governments are not going to like Bitcoin in the long run, very likely. And so, I mean, it could go to $1 million because it's pure momentum, or it could go to zero. But governments more and more already are working on digital currency. China just had a digital currency. Actually, I read something that's interesting this week about Bitcoin, that they don't even have to change laws to attack Bitcoin in the United States, because here's what they do. Enforce the laws, because every time you make a Bitcoin transaction, that should be taxable if you have a gain or loss. So you're going to have to, they're not enforcing this right now, but all they have to do is turn around and say, we're going to enforce that. And so if you trade in your Bitcoin, pay your taxes, or you're a tax evader, which has serious consequences. And if you have a loss, you can take a loss, but it complicates Bitcoin, and all they have to do is enforce capital laws. So then, in terms of Connecticut hedge funds, I mean, look, there's lots of hedge funds that are done terribly. I've always stayed away from them because some of them do great and some do terrible, and they take big pieces of action.
I do quite well. I'm not in Greenwich, but I do okay. Please, just two things, Peter. Please don't give the government any more ideas. But let me just say, look, I think when you're buying and selling Bitcoin, certainly the rules here, and I believe they're the same in the United States, is that the Bitcoin will have a value as far as they're concerned. And what happens when you buy and sell is it's actually not what profit you've made in your local currency at the time of disposal. It's actually either a yearly average price or a price that you can choose at different times. This can make the tax code a little bit complicated. Now, Australia is not quite as complicated as the United States, so I believe that in the United States there's probably a lot more loopholes. But let's talk about a Bitcoin for a moment, if you don't mind, and let's just talk about cryptos. Everybody who watches this show would know that I'm quite against cryptos. I don't see the value in them. I don't see what purpose they serve or what problem they're solving. But moving just aside of my own personal issues, I think that there probably is the argument that we're experiencing inflation with fiat currencies. We're potentially experiencing some destabilization in these currencies. And there have been a lot of new cryptos that have come up, and some of them are linked to the US dollar. Some of them are linked to commodity prices like gold or silver. And interestingly, we've seen a few recently that have been linked to the market in general. So it could be a basket of different stocks, not just necessarily in the United States, but a basket of stocks around the world. We see this with the dollar index. Oftentimes when I'm trading the US dollar or when I have a view on the US dollar, I won't just trade outright the US dollar against the euro or against the Aussie or against New Zealand or against the Japanese yen or any of the other major currency pairs. I'll often trade what's called the dollar index, which is US dollar versus an entire index of other of other currencies. Is there potentially something should be said for a crypto that pegs itself the same way, that says, our value derives from, a basket of currencies, or, people talk about the International Monetary Fund SDRs, something along those lines. Is there an argument to be made for that? Is that going to potentially give people a bit more faith in the credibility and the value of their underlying currency?
And I read something interesting, which is that everything about crypto and Bitcoin is linked to something else. So somebody wrote, what is the actual value of it? Although it has some value in transactions, but you could use. There's all kind of financial instruments already out there, and admittedly, you pay a very small percentage. ETFs and different things, but a lot of them are very low fee, and they exist already. So I would rather pay 0.25% or 1/8% a year to be able to trade an index and know that BlackRock or somebody big is behind it, and it's real assets behind it. The thing about the crypto is, let's say they say it's linked to certain market average. I don't trust that the crypto will even be there. I mean, it's subject because it has no intrinsic value except for what it's representing. So just like these pieces, by the way.
Peter, on that, we've seen certain things like exchange traded notes as opposed to exchange traded funds.
Right.
So an exchange traded note is something that it's theoretically pegged to a particular underlying, but it doesn't actually hold that basket. Now, with ETFs, some can be swap based like DWSs, but most of the time, if you buy a SPY or the 3 or 4 queens, the diamonds, anything like that, they actually physically own the underlying instruments. That we are beginning to see the rise of cryptos where they actually are holding the underlying instrument. And look, I still believe in fiat currency. I do. I know that people say that I just justify the bankers because I'm a big, mean old banker. But, I do believe that fiat currencies are the way to go, certainly for the moment. But for people that do have some concerns and have concerns about inflation, is a crypto that is literally pegged to an underlying that actually the company holds the underlying and it's callable. Is that potentially a good risk or a good hedge against inflation for fiat currencies?
Again,
So
I would say you have.
something.
Well,
I'd like to mention something. In the last few minutes, what we've discussed, we already associate and we see crypto, primarily Bitcoin, because it's the most liquid, the biggest market. So we discovered that there are political issues, there are business issues or investment issues, and many others, liquidity and what it represents actually. Because the way I see Bitcoin really represents and what it stands for and valuation of agreement between seller and a buyer of that particular cryptocurrency. There is nothing else what's behind its price. I don't care if it's 50,000 or 100,000 per coin or 400,000 per coin. It all boils down to the agreement between buyer and the seller. I would like to
It's a
ask,
pretty little coin. It's a pretty little
As
coin.
does,
That's
as
all
does,
it is.
as
Yeah.
does all financial instruments are really an agreement by buyer or seller. But let me make some specific point there. One, Bitcoin got hacked at one point, and and who knows what would have happened if it was hacked worse, and maybe it'll be hacked again, or maybe the governments will just outlaw it at some point because politicians are not liking the fact that governments can't. Bitcoin prevents them from stimulating the economy, from taxing, from all kind of things that they like to do. They don't like freedom that much. So, but if I buy a note from back,
especially the United States, the country founded on freedom, you guys, your politicians hate the idea.
Yeah, well, some do, absolutely. More and more, it's but look at the UBS issues notes, BlackRock, issues notes. Whoever issues these notes, first of all, you not only have them behind it, but SIPC insurance. So I know that, for a very small fee, maybe an eighth of a point, a quarter point, whatever it is, I can trade whatever I want, and I don't need to take the risk that, maybe it won't even be there and it'll go to zero overnight one day, or it'll be illegal or whatever. Why take risk for such a small?
I have a question to Roderick. Roderick has been so quiet for now. I have one question. Let's take for a second China, and that can be followed up in the US very soon. China issued its own cryptocurrency. It's the Chinese denominated cryptocurrency. So how China, for how long it will allow to have its official cryptocurrency, which just issued last week, and Bitcoin to exist and circulate at the same time. How long do you think China will allow for that, Roderick?
Actually, China more or less opposes it and has banned cryptocurrency for years. They are opposed. Although, here's another point about China. They're in Mongolia. First of all, they banned cryptocurrency mining because it was using up 1.5% of their power. But over this maybe I think it was last weekend, what happened is there was a power outage in one of the main Chinese cities that was a big mining center for cryptocurrency, and crypto dropped from 64 down to like 57, and maybe hit a low of 54 over the weekend because people were concerned that maybe China would just stop crypto because it's burning so much energy. And also on energy, for every $1 billion of crypto, of Bitcoin or similar, this is interesting, it's equivalent of 1.2 million cars on the road in terms of pollution. So it's terrible for the environment. It uses all this energy because people are mining.
All those evil capitalists don't care, obviously. But I'll just say this: if you take away all of the issues about hacking and security of the currency, the crux of my question is, are we attracted to alternative forms of currency or alternative forms of stores of value, given inflation, given the ability of central governments to print new money, not literally, but print new money. But I'll just move slightly past that point. I think it's I think it's an interesting situation. And look, this is the reason why I don't personally invest very heavily in techs. I know that tech companies do very well. I just don't understand them. Right? And look, I run a couple of hedge funds. I'm not gonna sit there and try and make out that I'm something that I'm not. I have people that work for me and work with me that are great tech analysts, and they normally get it right. I sit there and I go, I just don't understand. But when I look at currencies from a macro perspective, and my funds are global macros, when I look at a macro perspective, it's a lot easier for me to look at the United Kingdom versus Canada, or look at New Zealand versus Australia, or look at Australia versus the United States, or the United States versus the European Union, and work out, in my view, what's likely to happen, which economy is likely to outperform the other one, and try to make decisions based on try to make currency-based decisions, what movements I'm expecting on the currency, and also on their bond yields and that sort of stuff, and the bond yield differentials, that kind of thing. When you're looking at a crypto, it's a lot harder for me to try and determine that. I used to think, well, okay, well, the cryptos will probably act almost like gold as a hedge against a downturn in other currencies, but we haven't seen that. Now, I know that last year we saw that what is normally negatively correlated instruments, bond yields, gold, and the markets, we actually saw them move in unison. We're not used to seeing that. I made a lot of money out of that last year, not just for my clients, but also for myself. I had a tremendous year in 2020, but I wasn't expecting to see what I saw. And because I wasn't expecting to see what I saw, although I was making really good money, I changed some of my strategies. And for a big part of the year, I actually dropped out of markets I would ordinarily be in. It was the first time in my life that I've ever actually said I'd rather just hold cash at certain times during the year rather than actually being in the market. How do you value cryptos? And it's not just Bitcoin. You've got Ethereum. How do you value them? What's the underlying?
Shaquille, let's move on in my mind to what do you think the markets are going? Because I mean, we spent 20 minutes on crypto.
Important. Okay, because I do have an opinion on that, and this deals with your friend Joe Biden.
Yeah, I think we should get opinions on move on, because we don't want to spend too much on crypto. I mean, it's very interesting. A lot of people are covering it.
Before we move on to Marcus, I'd love to have an answer to my question, though. How do you guys, as investors, because this is another investment alternative, how do you guys go about valuing it, or you're just guessing? What do you guys do?
Nick has one. I have none, and I wouldn't ever put $1 into it. Sasha has none. And I doubt
Roderick, do you have any Bitcoin, baby?
But
I got mine in 2016.
But there's a lot. But the thing is, there's great opportunities in the market. So whether it's dividend stocks.
I have a Bitcoin, but I also have a poker chip.
I want to mention something very interesting.
So what about the market? Let's talk about the market.
There's 5 of us on the program that are more or less negative about Bitcoin, and we don't have any and not planning to acquire, except one thing. For the last 20 minutes, all we were talking about Bitcoins. This is almost like an enigma. It also draws our attention. And in fact, look, what is a Bitcoin? It's not a currency. It's not a stock. It's not a physical asset like gold or anything else. So exactly, you cannot put it in some investment.
The cartoons too.
The ticker at the bottom says, the ticker at the bottom says for entertainment purposes only. With that in mind, to our audience, if all the experts say don't do it, it's probably a really good idea. I'm always wrong. That's why I run a macro, absolute return, market neutral fund, because I know that I'm always wrong.
So let me ask a question, Roderick. What do you think happening in the market? Let's just get away from Bitcoin just for a sec. If we wish, we can always come back to Bitcoin, but today it's done.
There's a lot more to cover than Bitcoin.
Roderick, please advise us.
Yeah, I'll with a couple comments.
A little bit louder.
I don't have any Bitcoin. There are 1,700 last count cryptocurrencies. I don't think the government can shut it down. The value right now, the market cap is about $2 trillion, and that can't just disappear. Although I do think it is hackable, and as you mentioned, that's been proven. So it's possible that some teenage kid in the basement of his parents with a bag of Cheetos could zero all that out tomorrow, and it would just disappear. So I don't think it's a store of value. I don't think it's currency. If it is a store of value, and I bought a Bitcoin last week, I lost $12,000. Where did my store go? I can't go buy a cup of coffee with it. So I think it's just gambling. And I think if you look at non-fungible tokens, same thing. Somebody paid $69 million for one of those NFTs. And I think that one's easy to say, well, it's just a digital image. Why did you do that? What's happening right now, and this is true with the stock market as well, so we can segue into that, is you're basically getting waves of trillions of dollars in liquidity coming from the government. You're also in a situation where debt is basically free. After tax, after inflation, you can borrow money. Even junk bonds don't charge more than about 4%. So we've enabled zombies, companies that are insolvent, to just keep rolling over their debt. And basically what we've done with all this liquidity is after consumption and after savings, all of those trillions have to go somewhere. And so basically where they're going is in the asset categories. So after the stocks and after the bonds and now the homes, we're seeing that flowing into 1,700 cryptocurrencies. We're seeing it going into doggy coin, into NFT. And so until something breaks, we're going to continue to see all asset categories, in my opinion, just continue to go up because the liquidity has to find a home. So if you can get money for free, either stimulus or debt, and you can put it into any asset category that's going up today, why wouldn't you?
My favorite saying about the stock market and all other investments is that money and the prices of security is going to the area of the least resistance. So this is exactly what's happening with the Bitcoin. There is no resistance for the price going higher simply because there are very few sellers. There are some sellers simply don't know how to sell. They own Bitcoin, but they don't know how to sell it. So people who are buying Bitcoins, and there is more in the market, so the price, the least resistant for Bitcoin now at the moment is to go higher. So there are some days, even like today, when Bitcoin is marginally lower than yesterday. Why? How? I don't understand that. However, let's Peter, okay, we follow your advice. Let's forget it for a second about Bitcoin. I was looking for some attractive investments in the last few days. And I was looking for, first of all, area of high-paying dividend stocks. I'm telling you, last 2 or 3 weeks, I'm repeating the same thing. It's getting more and more difficult to locate any of those. Even one stock that, okay, I don't have a big position, say 1,000 shares, but the Philip Morris Altria Group, right? So there was an announcement about the possible U.S. regulation will limit the amount of nicotine in the cigarettes. The stock dropped in 2 days, probably about 5%. Actually, no more, probably 7%. So it's recovering now, and on I think it's April 28th, they have a quarterly report. So I expect stock will go hard because, quarterly report, the money is the money. And when you see the amount of cash they're generating, and they continue to pay very high dividends. So of course it's a keeper. It's the only thing is I may decrease my position maybe from 1,000 to 500 or something.
Yeah, I'm a little nervous because the Biden administration came out, 12 states, I saw this today, 12 states are urging the Biden administration to reduce the nicotine in cigarettes to non-addictive levels. Now, it's going to take a long time for people to quit, but I guess it's a threat to the industry. People are scared. Maybe it was an overreaction. It's a really hard thing to say. But the only place I have cigarette stocks is in a few mutual funds. I like consumer staples funds like XLP and RHS. actually I have a lot of RHS, and it's done very well because it's an equal weighted Invesco fund, and it has 33 different consumer staples, but 2 of them are cigarettes. So I looked at it, I said, all right, it's up enough that I can lose both cigarettes 6%, and I still am way up. And in the long run, I like consumer staples. But you're right. I was going to say the exact same thing, Sasha, about it's tougher and tougher to find dividend stocks. I work harder and harder, hours and hours sometimes on the weekends now. But I do have 2 for you when you're ready. Sasha, Shaquille, if you want to say something, go ahead.
Yeah, well, I'll just say so very quickly because I was caught unaware when I thought I was off, when I thought I was backstage. So a couple of our more observant viewers would have caught me smoking on air, which has never happened before, but on a previous show. Look, I smoke. I am trying to give up. I have a nicotine patch on, which is skin colored apparently, and I have a lozenge. And I still smoke, so I am working on it. I think a lot of people are trying to give up these days, and that's mostly for health reasons. But this is not just about what's happening in Western countries, the United States, Australia, etc. But it's inconvenient to smoke now. Most restaurants you can't smoke in a certain section. You go outside and stand in the rain and all that sort of stuff. But there is a lot of undeveloped parts of the world where tobacco companies are still able to advertise and really, in my opinion, do the wrong thing and push their product on people that they probably shouldn't. However, I think that when it comes to dividend stocks, look, tobacco companies, there's going to be a baseline of people who are going to choose to smoke anyway, right? I'm personally choosing not to smoke, or I'm trying to give up, not because I'm against smoking. If I didn't think that smoking caused lung cancer, if I didn't think there were health repercussions, if I could get a lung cancer vaccine from Pfizer or even from AstraZeneca, right, and risk the blood clots, I would take that vaccine and I'd continue smoking because I enjoy smoking. So, I think that there is going to be a baseline of people that are going to continue to smoke. I think the reason why you're beginning to see dividend yields go down is not actually because dividends are going down or revenues going down. I think it's actually because the Fed has pumped so much money into the market. Their stock prices have gone up, so dividend yields relative to the stock price has gone down. And interestingly, when you look at certain non-dividend paying companies or low dividend paying companies, their stock prices tend to be going up quite handsomely. So, is the current environment a good environment to be looking for dividend plays? I'm not sure, but I don't really think it would be. And now Australia generally, out the ASX 20, so the top 20 stocks in Australia, they tend to pay a much higher yield than what you see internationally. And even here in Australia, I think you're probably going to preference stocks that have got better growth potential than dividend potential in the current environment where all central banks are just pumping heaps of money in. Inflation tends to push asset prices up without necessarily pushing revenue up.
Yeah. Shaquille, what do you think of the Australian economy? Because I'm always considering I think it's EWA, I believe it's an index fund, ETF of Australia, and it has a decent dividend, but I never know. I was concerned, they were maybe too tied to China or, where do you think Australia is going in terms of their overall economy?
Look, I think, and I'm not saying this because I'm Australian, but actually I'm also British. I think that Australia is a good country to invest in. And I say that for a couple of reasons. During the Great Recession, if you ask, a 20-year-old kid in America, what was it like going through the Great Recession? A big percentage of 20-year-olds in America will recount stories of, how hard it was for their parents and how hard it was growing up. If you ask a 20-year-old in Australia what it was like, they're going to say, what recession? Right, we actually boomed during that period. Now, we are not just an agricultural exporting country, but we're also a mineral exporting country. We have a big mining sector, especially Western Australia, where I'm from. I think at the moment, given the big downturn that we've seen in the market because of COVID, and because Australia was actually quite depressed prior to COVID, I think Australia has a good potential to move up. I think Australia has some huge economic advantages, and of course we're protected by the United States. We're protected by the UK. We have some very strong allies. Yes, we have had some issues with China, mostly because we actually took America's side in relation to COVID and asked for investigations and things like that, and that has hurt some of our exports. But I would still argue, as I did way before COVID, that Australia should be trying to increase its exports with our allies. And I think under Donald Trump, there was a lot of talk about increasing our trade, and I think that'll continue under Biden. But let's take the United States out of it. The United Kingdom is also another place where I think we can export quite significantly. So when you ask the question, how do I think Australia's economy is going to go? It really has to be, how's Australia going to go relative to other economies? And I think that Australia will probably outperform over the next handful of years.
You know what? Let me follow up with a question. You know what? I think you're probably right. I would mention, though, that I like Australia a lot more than England because Australia has the commodity base, and England is a big importer of energy. And the North Sea is depleting very quickly on energy. So they're going to become more energy dependent, and they're already energy dependent, where Australia has the opposite. And they have a lot of oil and gas and a lot of other commodities. But here's my only concern about Australia, which is one of my two things that's making it very difficult to look at the market generally, is I feel there's a decent chance on a worldwide basis, and I'm going to ask you about Australia in a minute, that there's a black swan going on in terms of the office market. And, I've been presenting more and more at companies, 50,000, 80,000 employees. They're offering these employees the option to stay home. Personnel managers are saying they expect, at-home work to go from 20s to 40 percentile, in the 40s. So it's going to crash the market. It could affect financial institutions, banks. It could even affect iron and infrastructure, places that people think, they're going to build bridges in the United States. But what about all the office buildings that might be, sitting there and not building anymore? So, but here's my question. In the United States and in England, there's a long commute. But I don't know anything about Australian commutes. But I think they're smaller cities. So is it a situation where it's convenient and people don't have to commute that far to go to their work, so that then they'll say, okay, I don't mind driving 15 minutes to work. I just don't want to go through a 2-hour commute or an hour commute.
I think that's relative to where you live. Last time I was in New York, I had organised the limousine to take me to the airport 2.5 hours beforehand. I was in Times Square, and he showed up 3.5 hours beforehand. I said, you're really early. And he said, you need to get in. And I was shocked at how long it actually took me to get there, and I feel the same way in LA. But if you were to compare, say, Sydney or Melbourne to where I'm from, Perth, traffic distances are way different. I think when we really want to talk about the economy, a lot of people in Australia don't have jobs that are readily able to be migrated to home offices. A lot do, but a lot of people don't. But I still think you want to compare, our economy. We're a powerhouse in our region of the world. So I think you want to compare that to other. Excuse me, I tried to mute myself, audience. We want to try and compare ourselves to other neighbouring regions. Singapore is, of course, a very powerful or very economically powerful country in our region. I just want to compare what you talked about was the UK. I actually think that the United Kingdom, and again, it's not because I'm British, I actually think that the United Kingdom probably offers, under the right governance, probably offers the world's best opportunity at the moment. And I say that for a number of reasons, but mostly I say that because post-Brexit, and again, for the audience, I was against Brexit. Of course I am. I'm one of those global elites. But once the referendum was voted on, I said we need to leave the EU. Now, I have a lot of issues with the EU. I just don't think that the UK is better off leaving. However, having left, that gives the UK a lot more opportunities to trade with other trading partners, and predominantly that will be trade with the UK, with the US. So I actually think that the UK market, and the UK has had all sorts of things that have gone wrong throughout its history, but they always bounce back. I'll never bet against the United States. and I would say that I would never bet against the UK. The UK, of course, is a much bigger economy. There's a lot more people. It's a much bigger country than, not in landmass, but it's a much bigger country than Australia. I actually think the UK is something that we want to watch. And of course, the UK is coming out of Brexit, which means that all of the regulations and rules that they have had for the last 30 years has been EU rules. So they have the opportunity now to really, create their own rules and design their own future. So under the right governance, I think the UK is something that you'd want to watch very, very carefully, because I think that they will re-emerge as a big world player, which may have been somewhat diminished because of their involvement in the EU.
And what about
Okay,
Australia?
speaking
Though?
about UK, I have one interesting idea. You know, the one of the best experts of UK to the world is soccer, British football. I enjoy soccer myself. I used to play soccer when I was younger. And the best known team is still Manchester United. Their stock is trading on New York Stock Exchange, by the way. It pays 1% dividend. So it's not high paying dividend stock, but it's dividend stock. Now, I've noticed that in the last year, when there was hardly any soccer was played, their stock didn't really suffer. It was still held its own quite well. And lately, it started to go higher because there is a possibility to create a European Soccer Super League for 20 best teams. And of course, Manchester United is one of them. Now, there are problems how to negotiate it with European authorities and British Premier League authorities and so on. So it's not a black and white situation. However, the chance high, and even without that, there is another factor that the Glazer family from the United States, which owns majority of shares in Manchester United, they are about to sell their controlling package. So it will be widely held stock. And I think with appeal to Oriental audience, like in China, in Japan, everybody is crazy about Manchester United. The team has a lot of very good players, and they're acquiring even more better players now that the season is really starting to shape up. In the summer, there will be European Championship, which will be played in a live audience. Now, there are a lot of betting on soccer. By the way, I'm doing some bets on European soccer occasionally, and doing quite well that stuff. So
Sasha,
Sasha, are you saying you should buy Manchester United? You're suggesting Manchester United stock, right?
yes, I'm suggesting their stock, but not. I'm not sure that you have to do it necessarily today. I would wait a few days to just to follow it to see how it does and so on. I mean, I've researched the fundamentals to see the chart pattern and so on. I'm ready to buy today maybe 500 shares.
Well, what about these three stocks? U.S. Steel, Nucor, and U.S. Concrete.
Can I just talk about his
that probably will benefit from infrastructure.
Just for a second, Sasha. Here I am, appealing to our great British masses of audience that tune in, and now you've turned them all away. Because the majority of them don't support Manchester United, so we're going to have all sorts of soccer fans that aren't happy. Can I just quickly say, in relation to economies, though, another country that I think is very well worth watching is Russia. They've got a 13% tax rate. A lot of the former Eastern Bloc, or the current Eastern Bloc countries, former Soviet countries, have huge tech sectors. I actually think that Russia could be very, very appealing to international hedge funds and very, very appealing to fintech companies. At the moment, what they are faced with is international sanctions, but that will pass. At the moment, Russia has a reputation for being quite corrupt and that sort of stuff, but it is a former, it's a country that was formerly ruled by socialism. Again, that will pass. Russia is finding its feet. and I think that Russia is becoming less over time than what it was before. So I think that Russia is well worth watching as one of the emerging markets countries. I think India will do very well, but out of the EM countries, I'm quite fond of Russia. Now, I've never been to Russia. I don't know a lot about the geopolitics of the country and the region. And Sasha, you'll probably know a hell of a lot more than I will. But the optics from a distance, I think that Russia looks quite compelling. And look, there's a lot of there's a big mess in Europe. There's a lot of discontent in Europe. We're seeing European Union countries, France, Germany, Italy, Greece, Portugal, Spain. We're seeing all the big powerhouses in Europe, really not having a lot in common anymore. They're having a lot of arguments. What does that mean for the euro? What does that mean for Europe and the European Union idea? So I'll be very interested to see how Russia responds. I know Americans focus on Russia in relation to the United States, and they're, I think, distracted by China. I think Russia is a very interesting country to watch.
I'd like to go back to Nick's question. Here's what I'm wrestling with, because
Okay.
You okay? Okay. Nick asked about U.S. Steel,
U.S. Steel, Nucor, and U.S. Concrete.
Right.
There's a calculus behind it, Peter, that Uncle Joe, if he gets his $2 trillion spending bill through, is going to help out the aggregates in the steel industry.
Well,
and I want to buy stocks that have a chance next year to be worth a lot more. I want to buy Zoom a year and a half ago. I want to buy Tesla a year ago. And I'm looking at this bill getting through Congress, and then the aggregate business exploding because they're going to spend trillions of dollars, more than the entire economy of Australia. And all this money is going to be dumped into U.S. Steel, Nucor, U.S. Concrete. And I checked it today, and they're already up.
You might like Nucor because it's in North Carolina, but
I like Nucor the best.
With all of the carbon taxes and environmentalism and all that sort of stuff, who's to say that that's going to perform very well? Who's to say that's not going to end up with a massive tax?
I think it will be an infrastructure
$2 trillion. They're going to spend $2 trillion on infrastructure. Shaquille, some company's going to grab that money, and these three look like they're.
What makes you think, Nick, that it's going to be an American company that grabs the money? I mean, you've just cancelled the pipeline. So what does that mean? The pipeline provides energy into America for a cheaper price, not just in dollar terms, but environmentally. What does cancelling the pipeline mean? You're going to have to bring your energy in from overseas. So what's to say that Nucor is actually going to benefit from this infrastructure bill? What's to say that all the infrastructure materials is going to come from the United States?
Well, that part, I believe they're going to make it come from the United States. So the things I'm looking at U.S. companies, because we still have this angst against having foreign companies suck up all our profits, especially the Democratic Party. Since recently.
The U.S. is not going to lose its energy. The pipelines, in the worst case, they're going to truck it in. The same energy is going to be coming from Canada. It's just a question of whether they put it on trucks, which is very inefficient and environmentally bad.
They will put it on electric trucks. It will be good for the environment.
It's not good for the environment. But my point is
that's my point. That's my point, Peter. You'd rather truck it in if it's more expensive and environmentally. If it's more expensive environmentally, you'd rather truck it in than build a pipeline. So if Nick is suggesting that you'd rather prop up a polluting company like Nucor in North Carolina rather than pretending to offshore all of your pollution to a country like China, I don't think that's the case, because that's just not what the politics is in the United States at the moment.
You think we're going to buy our aggregates from Western Australia? Is that what you're saying?
The question I'd have for you is, what if the office market is collapsing and there's no more building of offices for the next 2 decades? Which I believe is probably where we're heading in the United States and in many countries around the world. And I have not been able to analyze this. I think an infrastructure bill will go through, because even if they get rid of all the other stuff, they could just use budget reconciliation to get that through.
Right.
So there's going to be probably infrastructure. Maybe they'll get the Republicans on board with if they'll bring down the budget to an actual infrastructure bill rather than what they call an infrastructure bill. But then the question is, what if they build a lot of bridges, but there's no more offices built in the United States, almost zero for the next 20 years and around the world? Which, good or bad? I don't know.
Well, what I'll say to that, sorry, Nick, go for it.
No, I think that's an interesting. That's the reason I'm looking at these stocks, and after looking at them yesterday, I just checked today. They're all up about 2 to 3% each in one day.
People think
so I'm trying to figure out, okay, in a year from now, what is the U.S. economy going to look like a year from now? Especially when Uncle Joe decides he's going to rip open $2 trillion and throw it into infrastructure. So wouldn't it be smart to buy infrastructure-related stocks?
It could be a good momentum play.
What I'll say to you, Peter, is if we're focusing on the United States has had its ebbs and flows. We've seen people move to the cities because that's where the jobs were, and then with the advent of the motor vehicle and that being cheap and accessible to the everyday family, we saw the big growth of families moving to suburbs. So. This is kind of going to be the same thing, I believe. But, the idea of offshoring, we've already seen offshoring. A lot of jobs, people need to actually be there, and managers want to actually see their staff. So I don't know.
But how are you going to offshore when you're redoing bridges in the United States? How are you going to offshore when you're building highways in the United States? How are you going to offshore that?
Yeah, but that's only a temporary thing. That's only a temporary thing. Rebuilding roads and bridges and that sort of stuff is only a temporary thing. And there's a very, very small amount of this so-called infrastructure bill which is actually for that. The rest of it's just for political nonsense.
Yeah,
just to keep politicians happy. But let's also say, Peter was talking about, what if they do various things, and what if they try and go down the path of reconciliation instead of trying to get this passed through the Senate. Look, if it's egregious enough, the Republicans can just refuse to give the Democrats quorum and just not show up, right? So there is some safeguards that are built into the US system, specifically because you're not one of the satellite countries of the mother country, right? You're not Australia. Australia, if it gets bad enough in Australia or Canada or South Africa or whatever, we can appeal it back. It's the bane of my existence, but we can appeal it back to the Privy Council. We can actually appeal it back to the royalty. I don't like that because I'm a hard Republican as far as the institution of the monarchy is concerned. But in relation to the United States, you don't have that option. And so inbuilt into your constitution, inbuilt into your system of governance is the ability to make sure that minority representation is not overpowered by the majority. So there are a heap of different options for the Republicans right now. And arguably, I believe that the Republicans will probably win back all three chambers, all three parts of government. There will be the same opportunity for the Democrats to block hard Republican rules if that's what they do in 2022 and 2024.
I'm going to liquidate everything and put it in U.S. Steel.
It might be a good momentum play because look.
Well, that's what I'm looking at, Peter. I mean,
Nick, I'm not disagreeing. Let me finish my point.
Oh yeah, go on.
Look, it may be a great momentum play because first of all, I'm not sure that the office market's going to collapse. I suspect it will, but it's going to take a long time for people to realize that that's offsetting it. So even if it's more steel, people are going to think, oh, big infrastructure, and so the stocks could move a long time up on basically the hope of infrastructure and what it represents.
Peter, I think I mentioned on some other shows, including this one, that I have a big problem with infrastructure projects because of shortage of skilled labor force who will actually implement all these projects. It's coming from top managers to mid managers to workers to you have to find a lot of qualified people for the jobs which lately almost don't exist. It's kind of new jobs which are being created, and you have to find qualified people. You're not going to train them on the job. You already have to have necessary skills, and of course, you don't want to pay them extra ordinarily wages to so I don't know how this problem will be mitigated because the usual problems of corruption and administration of all these projects and so on. This is this is another problem, of course, worth mentioning. This is why I'm sort. Nick, I understand your motivation about the stocks. It just doesn't excite me for some reason. I understand you probably will end up making some money, but it doesn't excite me.
Nucor pays a 2% dividend, so that's what I was looking at Nucor.
Okay,
that's
a good beginning,
which is not bad. But I want to listen to Peter's picks because I was checking my portfolio and everything that I bought on this show is up except Hertz, which is my own fault because I said I'm going to go against what you guys said.
I do have 2 picks.
Yeah, so what's your picks for?
Okay, so I just want to say though, it is getting tougher to find.
It is tougher to find good dividends.
And you know what, my general forecast, I want to say why it's tough is, I think interest rates are going up for the short run. I think as we come out of COVID, rates are going to go up for a while, maybe 6 months. It's going to put some pressure on the market. Stocks are really high right now, but they should be even higher, I think, because in the long run, I think interest rates are going to zero, most likely, like 80%, because of the huge debts around the world. Countries are not going to want to pay anything, basically, on that debt, and especially the United States. So here's 2 companies I dug out. They're not ones that are well known. First one is called Oil Dry Corp. And it's actually a micro cap, but that doesn't mean it's that small, and it's not. And the best thing to do is read about them because it's a very complicated business, but they're in the sorbent business, which I learned about reading about them. And basically, they're products that absorb liquids, oils, and things like that. So they have agricultural products that are natural. They have cat litter. That's a big product for them. But it's what I like about the stock is.
Sorry, what's the name of the company, Peter? Oil Microcorp?
ODC, Oil Dry Corp. And so here's why I like this company. First of all, for the last 5 years, they've been steadily rising revenues. I mean, these are all businesses that there's probably not a lot of competition in. There are a lot of businesses. They're all technical and chemical and technical, and they seem very smart. The cash flow is 7.8 times. In other words, the price over cash flow. So that's like a 12% cash flow yield, which is what I always like to look at. So they have a lot of cash flow. Their dividend is around 3%, and it's been increasing 4.5% to 5% a year for the last 5 years. So it's a steady grower. So I put in a little less than 1% into that company because I view it like a consumer staples with a higher dividend and a nice growth profile. I mean, I'll watch it, but and also, by the way, their debt is as close to zero as I've ever seen a company. It's like 0.25 to 100 of assets. It's got basically no debt, very well managed company. Again, you have to read about it, Oil Dry Corp, ODC, but I'm willing to put a little less than 1% in there because I think the dividend will increase over the next 10 years as opposed to getting zero on my bonds when they run out in 8 years. But
can I ask you a quick couple of questions there, Peter?
Sure.
About ODC. Firstly, because I'm physically in Australia at the moment, I typed in ODC and I got the Office of Drug Control. I didn't know there was such an agency in the Australian government. Apparently there is. This is a company that's worth 250 million. Its market cap. So obviously I can't within my funds I can't buy it because I don't have owning 10 times the company. Does that concern you that I know you preface this with it's a micro cap, but does that concern you that it's a micro cap company? And also you talk about a potential increase in its yield, but there's a potential decrease as well. What are they doing at the moment that attracts you to this company? What are their fundamentals? Years? What's going on with them?
Let me answer that, and I have another company that's a bigger company for you too. But first of all, again, what are they doing? Is besides 5 years of revenue growth, their cash flow over their yield, over their price, the price over their cash flow is 7.8%. Is 7.8. So that means basically they're bringing in tons of cash, because if you put price over cash flow and you reverse it, you get the cash flow yield. So it's like they're bringing in 12% cash every year, which they can distribute in dividends, and they've been doing it steadily, or they can, invest in other businesses, which they've been doing too. So I love businesses with generate cash.
That's a fair point. And if we're looking at a bigger company, that would be much more compelling. You made the comment a few minutes ago that they have very low debt. I remember
zero.
looking at companies like ServCorp and some of those sorts of companies that also had very low debt. But when you're an analyst and you're looking at companies like that don't have any debt on their books, and I know this might sound very counterintuitive to a lot of our audience, but when you're looking at a company that doesn't have any debt on its books, that will often make analysts say that's a very bad
slow growth.
That's not a very good way of using
right.
their potential. So the fact that they don't have very much debt, it might look good if it's Microsoft. The fact that it's only worth $250 million, that can actually count against it.
Yeah, well, Shaquille, in terms of the size and the debt, first of all, you know what? They've been that way for a long time. In other words,
that's the problem. Because
you know what? It's like,
it indicates that the management is not trying to grow the company.
No, they're not trying to expand like Microsoft. It's not a huge growth play, but it's steady Eddie in terms of it's like a consumer staple, basically, which I like a lot because I think that people are going to appreciate even look, the consumer staples that I have are paying 2%, the XLP, the RHS, but I'll take 2% growing to 4% in 10 years because I think interest rates, and I wouldn't put all my money in there, I'm half bonds or a certain percentage, but I think my bonds are going to mature and I'll probably get zero on them for the rest of my life, very likely. So I want to get lock-in dividend stocks. Because we're short on time, let me just go to the other one. This one might appeal to you, might not. And you're right, it is a small company. It's the smallest company I've ever been in, but I still like it a lot because it works. And I'll watch it. I always watch it. Spartan Nash is another company that's interesting. Here you get a 4% dividend, SPTN, I believe. 4% dividend. Cash flow is actually 5. Price over cash flow is 5.45. That means they're making 20% profit in cash flow. For every dollar of price, you're getting 20 cents on the dollar in terms of cash flow. So it's huge cash flow with a nice dividend. Their debt is extremely low also. So, and what they do is they're a food distribution company.
Did I get this right, Peter? Smart Nash, is that it?
Spartan Nash.
Yeah,
Spartan Nash.
SPTN. These are companies that if you're following the Warren Buffett rule, these are companies that I've looked at them for 30 seconds. These are companies that I think would be worth buying if you were going to buy the whole company. I'm not sure how much I'm going to trust the board of directors. And as I said, because they're listed, I personally would put a few ticks below them. If I was a Penny Dreadfuls investor, I would put a few ticks against them because of how low their debt actually is.
Well, again, you know what? I agree with you. A lot of times debt makes sense, but if a company is working really well without debt, it gives them even an opportunity. It shows two things. One, and by the way, this is a food distribution company. So I don't like let me say this. I don't like grocers a lot, other than Village supermarkets, which I'm a small percentage in. I was in Kroger for a while, but here's the thing. Minimum wage increases in the United States are going to really hurt supermarkets like Aldi. I was looking at Kroger, and when these minimum increases are going to hit their very tight margins. So
why do you dislike groceries for the audience and for me? Their revenues are relatively stable once at a baseline. Why do you dislike grocery companies?
Well, I'm saying that I like Spartan Nash because they're a distributor of food. So what I don't like about grocers is two things. One, minimum wages are going up in the United States and probably around the world. So that's going to really squeeze their profit margins. It's a very low margin business. So that's one thing. And the other thing is and this is not as scary as I thought it was initially, but a lot of buying is going online. And what you could do is, let's say you go online, you can look at the prices on 10 different stores and compare. However, my wife pointed out very cleverly that all those prices are higher because there's so much cost in having somebody pick out your grocers and bring it to you, but it's still a growing trend. So between those two, here's the thing about SpartanNash. Not only do they have the nice dividend, nice growth, nice history, they're doing a lot of things. They're actually working with Amazon now. They have a project with Amazon that involves food distribution, and they also have a military branch where they're supplying the military. They've been doing this for a while, but they're reformulating it. So there's a lot of positive action in terms of management. It's got, again, tremendous cash flows. It's a kind of thing, I put maybe 0.5% in there. It's, I like to get these as part of my portfolio, high dividend, high growth stocks to balance bonds, gold, and options that I'm selling, as Sasha recommends.
Well, all can I say very quickly about the food staple stocks? You know what is my favorite? It's Costco. Because if we're talking about low margin business, Costco has no margins at all. They're supplying a premium style products at cost. How they can do it? They have membership plan, and all their profits is generated by membership. They are unique. I like unique businesses. I like Costco, which is unique.
I like Costco too.
I like Nvidia's, many times.
I love Nvidia.
For obvious reasons, it's a king. It's unlike anything else. It's in a class on itself. It's like a Tesla in electric cars. So Nvidia is in chips. So when I'm looking at some alternatives, for example, I bought some shares of enterprise product partners last week, right? I sold covered call options or so on. I'm doing fine. Stock is fantastic. Company is doing really well.
I did too, Sasha. Coincidentally.
Is there excitement though? I don't know. Is there excitement like Nvidia or Zoom or Costco? I don't think so. But it's a good stock, good company.
I put 2/3 in EPD too. I like
EPD. Oh, good. They have a fantastic dividend, very safe. Stock is moving like a tank. It's just going higher and higher and higher and higher. And you know what? It's boring, but it makes money.
It's a pipeline. It's nice and steady.
Jax makes money. And I increased my position in Barrick Gold. That, in my opinion, Barrick Gold, it's now about, $22? I think it can easily go to $25 in the next few months. Okay?
Oh, really? Wow.
Well, so hopefully, I don't know if to choose Bitcoin or Barrick Gold.
No, not Bitcoin. No.
My choice is Barrick Gold.
I do Barrick Gold, right?
Wow.
I had to go see. I'm in Kinross Gold. I knew I bought.
Kinross is a good company.
Yeah, I think they're a good company. Yeah.
And another one is, of course, Franco-Nevada is far the best possibilities in gold. It's a little bit more expensive, of course, but this is very good possibility. Guys, we'll have next week a show. We'll continue our discussion there. And I wish you successful trading week and otherwise. And it was IBM TV modern investment show. My name is Sasha Star. Thank you very much to all participating. Good luck in the coming week.